Yesterday, the euro gained strong upside momentum as traders digested stronger than expected data on manufacturing activity for the euro area, Germany, and other European Union member states. In general, however, purchasing managers' indices remained below the 50 mark, indicating further contraction in manufacturing. This limited the euro's bullish run, preventing it from rising above the high posted on October 31st. As a result, the European currencies slid despite US labor market data, which was in line with expectations. The euro came back under pressure from statements by Fed and ECB officials. Nevertheless, from a technical point of view, the uptrend remained intact. Speaking of the British pound, the focus of market participants was on the Bank of England's interest rate decision. The regulator held the benchmark rate steady at 5.25% as expected. Bank of England Governor Andrew Bailey said that interest rates would remain elevated for an extended period of time, adding that policymakers would follow a data-dependent approach like other major central banks. This decision lifted bets on potential policy easing. Now markets expect a total of 4 interest rate cuts over 2024, which is likely to play a decisive role in shaping further market trends. Today's macroeconomic calendar includes data on Britain's services activity, Eurozone unemployment, as well as speeches by Bank of England and Fed officials. All eyes will be on US non-farm payrolls. According to forecasts, non-farm payrolls likely increased by 180,000 last month after surging by 336,000 in September. This fact may well support the euro and the British pound. Weaker than expected data could weigh on the greenback, suggesting that further rate hikes will be off the table. Besides, traders may take notice of the US unemployment rate, which is expected to hold steady at 3.8% in October. Furthermore, the Institute for Supply Management is set to release its services PMI. The index is forecast to stay above the 50 mark, indicating expansion in services activity. Better than expected data may back up the dollar. If data comes in worse than anticipated, the US currency will dip, thus allowing the euro to rise above the last month's high. And now let's move on to technical analysis. According to the 1-hour Euro-American dollar chart, it's worth focusing on the levels of 1.0642 and 1.0616. A decline followed by a false breakout at 1.0616 will create a buy signal, thus driving the euro up to 1.0642. If the price breaks through and consolidates above this level and amid downbeat statistics from the US, the euro will probably surge to 1.0667 and even 1.0693. At the level of 1.0693, I recommend going short on the rebound to catch an intraday correction of 20-25 pips. Short positions at 1.0642 and 1.0667 can be considered amid a false breakout. Alternatively, if the price falls below 1.0616 and tests it from the bottom up, strong data from the US will bring the euro down to 1.0593 and 1.0569. At the level of 1.0569, it would be a wise decision to go long on a rebound, counting on an intraday correction of 20-25 pips. Going long at 1.0593 and 1.0616 will be relevant in the event of a false breakout. Meanwhile, the British pound has a chance of hitting a new one-week high. If the price fails to consolidate above 1.2523, a strong sell signal will be generated. Thus, sterling will come back to 1.2184. If the UK services PMI is well below forecasts, the British currency may well break below 1.2184. Its bottom-up test will lead to an increase in the volume of short positions. In case of positive US statistics, sterling may sink deeper to 1.2157 and 1.2127. At the level of 1.2127, traders are recommended to go long on a rebound to catch an intraday correction of 25-30 pips. Long positions at 1.2184 and 1.2157 can be opened only amid the false breakouts. As an alternative, if bulls take control of 1.2223 after the release of US labor market data, the British pound will have a chance of recovering to 1.2258 and 1.2285. Good luck and have a great weekend.